We're looking at S&P 500 mini futures. The time frame is 2000 tick chart, which is very similar to 1 minute chart. And I'm demonstrating a runner of a high probability setup based on pure price action rules. Now, normally I don't record public videos on Tuesdays, but today's price action was so great that I decided to use this opportunity to talk more in depth about trading and the mindset you need to acquire to achieve consistency in this game. Because you remember 2 weeks ago we talked about how the price action was challenging, how it was lackluster, very few setups, but we also talked about that we need to accept this. It comes to the territory, market goes in cycles, and good price action will soon be presented. And true to its form, this is exactly what happened today, and pretty much since last Monday till now, price action truly has been amazing. The trading for me personally was effortless, and if you are objective and you follow price action rules, there's almost always several good, easy, high probability setups that you can take advantage of, and today was no exception. So I really want you guys to grasp this concept that you cannot take anything personally and you cannot be emotional, because last week you may have felt discouraged, and this is what developing traders tend to do. Developing traders, when they're trading for 6 months or maybe a year, you feel like it's taking forever, like eternity, because you want to feel the progress quickly every single time there's a holiday or weekend. You're pissed because you want to wait for Monday, you want to start trading. I was the same way. Every single time there was a holiday, I couldn't trade. And I was pissed because I went to trade. I want to feel the progress. In the grand scheme of things, after years of trading, you will realize that there is so many more trading days that you will be trading. There is so many more setups that you will be taking that the singular setup in any little scenario is completely insignificant. Because when you're starting out, when you have a losing trade, you take it to heart. It's too important to you. Same thing. When you miss a setup, you feel the fear of missing out. You have a FOMO. It's too important to you. Okay, and this is normal, but you need to disassociate. You need to remain unemotional. That's just part of trading. Sometimes the price action is going to be lackluster. Not that many setups. Okay, that's your job. Your job is not to make stupid mistakes. Your job is to not stare at the chart, walk around the office, remain objective, because you want to enter when everything in price action aligns. Okay, the price action is talking to us. It takes time to master, years, just like foreign language. But the more you immerse yourself in it, the more your gut feeling will be developed, and the more you'll be able to predict what's going to happen on statistical basis. Okay, this is a skill that needs to be mastered, can be done, and in the long run, you'll be able to extract the money from this market if you keep studying this skill. I mean, today's price action was so effortless that it was almost too easy to believe. Now, what am I talking about? I'm talking about these two setups. This was the setup that I took that produced quite a decent runner. I also wanted to show it to motivate. You guys have been asking me lately how reliable it is to be getting good runners. And you've been witnessing that lately I've been able to catch quite a few good runners. You know, getting 10, 15 points worth of a runner these days with today's volatility, it's very doable. It's not like back in the day when the market were less volatile. With this volatility, you can really get significant runners. You don't have to be afraid to start incorporating more runners in your trading. But let's talk about what happened here. And once again, we can get all the information based on pure price action. That's why I'm so passionate about this. We don't need any oscillators, Fibonacci, Elliott waves, any oscillators, none of this stuff. Everything is given to us from the market. We just need to be open, objective to receive the information and to work with it. Because what happened here was we had a trend range. We started with bullish imbalance. The lows are higher and higher, and eventually we broke higher. Okay, this can happen in bullish imbalance. Now this is turning into runaway trend. How do I know? Because the pullbacks are very tiny. The trend is healthy, consistent, and we're barely touching the EMA. We barely touched it here and we continue working hard. So this means I need to locate the channel. If you're going to take a look at the bottom of this channel, I have 4 geometric formations. Market geometry is real. You can see how nice it fits. I'm going to copy, put it at the top. And at this point, I'm looking for good setups. Now, there was a decent triple test here. It was a little bit further from the EMA, but when you're taking the runaway trend, you need to be taking setups a little bit more aggressive. But this was absolutely a textbook setup. You're looking at this like this, and you see 3 key entry points, okay? You have the EMA. This resistance is turning into support. You have the trend line is a breakout pullback pattern. So you have clean two-legged pullback, textbook signal bar, great setup. I want to take this setup, but my limit order didn't get filled. I was a little bit too slow, but you can see simple price action. But we're not done. That's not over, because we know if you break the channel, we're most likely going to get new extreme. So the only thing I'm thinking about is push above EMA and a high probability setup. So we have new low, first entry short, high low is below EMA, I can't take. And then we have double high probability setup. Why? Because if I'm going to come from this low, the first entry short, second entry short failure, new high, first entry long, second entry long. So 2 high probability setups in one. We need to get new high. This was a strong trend. And the stronger the trend is, this is my basis from deciding how I'm going to manage my runners. If the trend is weak or rangy, I'm going to most likely take my runners at some key levels, important places. If it's strong like this, I'm going to give a little more room, try to ride this as much as I can. And eventually the strong trend is continuing, then I need to look for a bigger channel because the trend is so strong. You can look at 10,000 tick chart. You can see another confirmation of 3 key entry points. So there's always a correction phase, push phase, correction phase, push phase, correction phase. You want to buy at the bottom. Now this was very tempting setup, 3 key entry points, but you're buying directly into these highs. The sellers are going to get trapped, but you're buying so high, and they really need to close much lower. So I don't think we can go long here. But then we had repeat pattern, breakout pullback. Now we have a downtrend play here, but we have textbook high-low confirmation setup off the trend line. If I'm going to make it a little bit tighter like this, off the EMA, and once again, this support is coming to play, breakout pullback. Eventually we have a break, new extreme. So this was very easy. So I really wanted to have this talk for you to not get frustrated next time that the price action is a little bit slower. You're not getting good setups because it can really turn around. You're just patient. The price action will offer good setups. I mean, anyone can take these setups. We don't really need anything too complicated. If you're just following the price action, following the rules. I will mention one thing though, because I've noticed a pattern that traders are doing, and I understand the behavior, but you need to think about what you're doing a little bit more in depth. I noticed, especially yesterday, this high-low confirmation of a two-legged pullback, and trader was afraid to take it because the single bar was too big. You can see large two-legged pullback, and we had 3 key entry points if you remember. The same thing happened today right here. Trader was worried about potential wider downtrend. Now, the more confluence you have, the more reasons you have to enter, the better. Okay, the less you have to be worried about any negative sign you get that the setup may be bad. And sometimes traders, they're looking too much for something to be wrong with the setup. If the context is good, you have a lot of key entry points, you know what is the bias, where the market is heading, you cannot be looking for too many negatives because you're almost always going to find something wrong with the setup. Okay, so if you have a lot of key entry points, if you know what is the bias, just take it. You have to take it. You cannot be too afraid that something is wrong with it, because trading is about trading in uncertainty. You just have to take the risk. That's what trading is about. But the price action rules are here to tell you what most likely is going to happen and where the market is going to go. So don't be too much in your head and don't be too afraid when you see a good setup, and especially if you have a lot of key entry points, just like today. If you have support, trend line, and the EMA, if the bar is a little bit bigger, you just have to take it. It doesn't really matter, because the next time when you see bad setup and the context is not clear, you're not sure about your trend line, but you have two-legged pullback. Remember, the two-legged pullback pattern is only here to help us confirm you're reading the context correctly. If you see two-legged pullback alone without understanding what is the bias and being confident in your trend line, that's not really a good setup. The stronger the context is, the less the actual setup matters. Let's continue with the price action. We had a decent second entry short combined with the multiple EMA rejections. Problem is the break is not that convincing and the trend was quite strong, so you need to be more advanced to take this second entry short, but because it is so rejected by the EMA, more advanced trader can consider. Now we have bearish push working lower, so I'm going to redraw the short and downtrend. We are breaking the channel, so I'm expecting for price action to pull back to the EMA and now for me a second entry short because I expect new low that is downtrend. We have a second entry short, but there's still a gap between the body and the EMA. Okay, and there can be a double trap stopping all the early sellers, so we can't really take it, unfortunately. Can we get a lower high? Yes, we have a lower high. We're not full at the EMA. That's not the big of a problem, but more importantly, we already reached the new extreme right here, so we can't really take that as well. But you can see once again, this is how price action develops. This is what you're looking for. This time, unfortunately, not full at the EMA, and here, since you already created your new low, we have to be a little bit careful. I'm treating this more as a first entry short now because it is not part of this pullback. It's kind of left in here all alone. Market created new extreme. Now I can see that at the top I have geometric formation of these highs working lower, so it allows me to possibly look for some bigger channel like this. Let me see, how does it fit at the bottom? Okay, it fits fairly well. I have a failed second entry short, but I can't really take it because the bias was more bearish. What if the wider downtrend is in play, or wider uptrend played out? EMA is flattening a little bit, and we're above EMA. I can't sell. I don't see any good setup. The uptrend still needs new high. EMA is going sideways, so this is where you have to be really careful, because this is the sideways consolidation where you can see so many dojis, a lot of stims, EMA in all these bars. This is the point where you have to predict possible trend range because EMA is flattening, you have consistent price swings up and down. Here's the highs, here's are the lows. Okay, this uptrend played out. We have first leg up, break, second leg up. You have new first entry short, second entry short, but this is just establishing the resistance. So I'm being a little bit more patient. Okay, now we have triple test here. One tap, double tap, triple tap. Decent strong bearish bar. I have large two-legged pullback, and I'm getting confirmation that the resistance is holding many times. And triple test is a local setup that we can use where selling high, as according to trend range rules you want to do, we trade it down into the string range, and most likely this wider downtrend, if it's in play, it's gonna get new extreme. So decent setup to consider. Triple test at the top. A lower high would be interested, but never got a trigger. So no lower high formed. Okay, now we're getting back above EMA, too much congestion. Now notice we have a lower high breakout pullback. You have 6 bar stack right next to each other. You broke lower, came back, tested it. But my lower high here is bullish bar. If you have better bar here, bearish bar, you actually could have considered. Actually, now that I'm looking at it closely, you can treat also like a first entry long pullback, second entry long failure as well. But there are so many matching highs, so it's okay to reset the country as lower high. You know, double bar entry, how big it is. You know, it's not that bad, so you may have considered double bar entry, but by the time you sell here, you don't have much room to get out before these lows. You need to be a little bit more careful. This is why it's more aggressive. You need to have a really solid bearish bar here at first attempt by breakout pullback below EMA. We're coming off the highs, we're gonna reach the lows. Okay, I don't see a good setup. We created a new extreme, so I'm gonna mark it. Okay, we're back below EMA. I'm gonna put my range a little bit lower, and you can see the confusion. Completely different structure. Okay, we're bouncing back up. Okay, we're at the highs, but I have to redraw a brand new uptrend because this one played away to break new high and market reverse all the way down. I don't think we can take lower high. Doji, first of all, and second of all, what if this uptrend is gonna get a retest? Okay, this downtrend is new low, but I cannot sell. The uptrend is in play. We're back above EMA. Remember, we are trading a trend range, so we cannot sell at the bottom. We'll break new extreme, and at this point, I think there's absolutely no setup, and it's getting way too late here. So not that many setups to close the day, but most of the setups they formed earlier, the first part. So your job once again is to trade when the market is aligning with price action rules. When it is harder to read the market, you gotta be a little bit careful because you really want to see confirmations that you're trading it correctly, they're reading it correctly. Every single time you're guessing, that's when you're gambling, and that's when you're not most likely going to do well, because gamblers do not do well in this business. You need to be confident that you're reading it correctly. So I hope you find today's lesson helpful, educational. I hope you had a good trading day. I'm going to wrap it up. I'm going to talk to you next time. Good luck with your trading.